Afternoon, everybody. Welcome to the weekend report for August 16th, 2024. Coming a little later today, celebrating my parents' 60th wedding anniversary. So I went and had lunch with them. So hence my delay today. But congratulations to my parents for making it to 60 years. That's a kind of a big feat, not something that you see much anymore. So congratulations to them. Let's talk about what's been in the news as it relates to mortgages. Mortgage applications for last week, purchases were up 3% and refinances were up 35%, people. 35%. That's huge. That's a lot. In the past 2 weeks, up 54% in total, and 50% of incoming applications are for refinances. So again, yes, I think there's definitely some pain in the market, and people are looking to give up their 3% mortgage rates so that they can cash out and pay off some debt. Puts them in a much better financial position, we're seeing. So just pointing that out because I think it's well known, even though nobody wants to say recession, but it is what it is. Initial jobless claims, those filing for the first time, down 7,000, continuing down 7,000 as well. So a little decrease in activity there. Now, one thing that was interesting this week, retail sales, that was kind of big news for the week. For the month of July, only up 1%. Pretty tame, all things considered, but June was modified, revised down to a negative 0.2%. One of the big market movers this week was actually Walmart reporting their earnings, and they're showing gains. Walmart doing well, which is normal in an economy where things are slowing down a little bit, people stepping back, spending a little less, going to something that's more economical, such as Walmart versus Whole Foods or things like that. So Walmart earnings strong, and that was good for the stock market. This week, we also got PPI and CPI. PPI is wholesale inflation, did show for the month of July that it was up 0.1%, but it was much cooler than expectations. So that was actually good for the MBS markets, and the core was at 0% for PPI. Now, CPI, which is one of the Fed's favorite, I think the Fed's favorite measure of inflation, the headline number was up 0.155%, very minimal, and the core number was up 0.165%. Year over year now, we are down to 2.9% on core inflation, which is very good, with the Feds having set that goal for 2%, which is silly, but nonetheless, whatever, we're coming down. That's what's important. So now all the talk is, how many rate cuts will there be this year? How much will they total? Will we see 25 basis points or 50 basis points in September? I think it's a given we'll get our first rate cut in September, but it's likely to be 25 basis points versus 50. And remember, this is good for you as a consumer because the short-term interest rates that the Feds monitor, those deal with credit card payments, car loans, variable student loan payments, and equity lines. So those payments should be coming down for you when the Feds do start those cuts. Let's take a look at the MBS charts this week, and you can see that been pretty tame, not a lot of movement over the last week. We lost a little bit of ground. Today we ended up at 17 basis points. That's good. We started down then and made up some ground. So the inflation numbers not driving the MBS markets any one direction, which is good. If it's not going to tank, we want it to at least be stable. So anyways, that's what's going on this week. If you have any questions for me, please reach out to me. I do appreciate when you like my videos. I'm happy to hear your inputs and interest in the economy, what you see going on out there. Love to hear what you have to say. Otherwise, have a great weekend. Stay cool and see you next week.